Okay. Hola, hola. This is Vich, guys, from Solve Forex. Today, I'll be explaining a lot on analysis. We're gonna do an analysis on volatility 75 index. Guys, these are the secrets that we found as Solve Forex on these indices. We saw that these indices use a lot of harmonic patterns, of which harmonic patterns are patterns that we've been doing on Solve Forex since 2016. Because there's another guy that showed us these patterns from the States, who showed us everything there is to know about harmonic patterns. Harmonic patterns are powerful patterns, guys, that you get on pairs also. You can use these patterns, and especially on indices. That's why you can use a lot of these patterns. It doesn't mean that you can look at a single time frame. All time frames specialize on these harmonic patterns that I'm going to show you today. Not only today, but we'll upload a lot of these videos explaining a lot about harmonic patterns, more especially if you join our group. That's where you're going to be taught on how to use these harmonic patterns, how to do entries on them, how to spot good entries, how to spot scalping, how to spot swing trades using harmonic patterns, because that's what we specialize on Solve Forex. But today, guys, I'm going to do a small analysis explaining what harmonic patterns did I get, or what entries did we get on volatility 75 index. Let's get right to it, guys. Okay, as you can see on the chart, guys, when I looked on volatility 75, I saw that it's in a bullish trend. You can see there's a channel that's going up there as in a bullish type. I'm gonna clone this line, put it on top. You can see there's a bullish channel that was going on there, going up. Then I saw that this trade, because remember, we're on a daily chart, because this is a long-term chart analysis. We're going on a bullish channel. As we're going on a bullish channel, this line, we call it a resistance. It's a resistance line on our bullish channel, and then you get a support line at the bottom. And then it broke through, our chart broke through, retested on top of this resistance resistance channel line. You can put a zone there. Let's rather put a zone here, because as soon as this chart broke through and came and retested, that's when this part became sensitive. This is our sensitive zone on our daily chart, and this is our supply and demand zone. So it broke through, retested as a channel type. You can put a line there that's telling us that this is a channel that's going down to our zone. You can see that it came as a bullish channel, broke through, retested on that zone. You can see there's an impulse that was going up, because market goes in impulse and correction phase. This we call a correction. Broke through. This one also is same small correction that you get there, but it's on top of the zone. You can't talk much about this one. I'm just making an example of what I'm talking about as a correction. So this chart rather went up in a bullish type as a channel, and then it broke through that channel. Then this channel was invalidated, broke through. There's a correction first that happened on that zone, which shows you that you must expect what? You must expect an impulse going up. Then there was an impulse going up, small correction went up to test on this zone right here. Then when there's a correction that's happening, or the correction that is going down in a bearish manner, that shows you that you must expect an impulse breaking up to the upside from that channel. Then that's when I saw that there was gonna be a harmonic pattern that's gonna form there. Harmonic patterns happen in impulse leg. Once you see an impulse phase that is going on, that's when you can expect an impulse leg coming from a harmonic pattern. Remember, guys, we're on a higher time frame. We're still gonna take it down to lower time frames. And remember, as I said before, that you don't only get these harmonic patterns on higher time frames. You get it on all these time frames, from daily, 4 hour, 1 hour, 30 minutes, 15 minutes. So it works for whoever. You can use it in your strategy. If you are a swing trader, it's also good for you. If you scalp, it's also good for you. If you're an intraday trader, it's also good for you. That's what we're gonna show you in the group of Solve Forex, because we've been using these harmonic patterns since we started trading from 2016. So we became masters of these harmonic patterns. That's what we're gonna show you when you join our group of Solve Forex, sorry. That's where we're gonna show you how to get entries on these harmonic patterns, how to use them in order to capitalize on your forex trading. So guys, it went up as a bullish channel, came back and formed a correction there on the zone, shoot up as an impulse, came back as a channel, retested on that zone, went up as an impulse. That's where we got our impulse X and A. We call this, I'm not going to explain further, guys. I'm going to explain on the group how you spot the points on these harmonic patterns. Came on that X, formed the for harmonic pattern there from point X to point A, came back on point B, that's point C, that is our point D, where you get your entry levels, where on our point D, because remember, this is a bullish harmonic pattern that we spotted there. I'm going to explain further on this harmonic. How did I saw that it's really a pattern that I can use for my entry levels? Okay, we start using our Fibonacci retracement. That's where you can spot where to get your entries. Once you take it up from point X to point A, once it comes back and retrace on one of these Fibonacci points, you can see there it retraced on 618. But guys, it doesn't mean you can start exactly at the bottom to use this harmonic pattern. You can start on either one of these retracement. That's gonna show you whatever works for you as harmonic pattern. Whatever you see that this one is good for you, that's where you can say. It doesn't mean you can take your impulse leg from the bottom. It's not, it doesn't mean you can do that. You can take on whatever retracement that you can. As soon as you see a wick or a retracement or a reversal on this left hand side, that's where you can put your point X. But rather, I'm gonna leave this one. Okay, let me explain from the bottom. Once you put it at the bottom, your X, and then it retraces on 618, you can get two harmonic patterns from 618. You get a Gartley and you get also a crab pattern. Gartley goes from point X to point A, comes back on 618, but doesn't break the high, comes back and breaks the low. Once it breaks the low, it's gonna retrace where on 786. Once it gets on 786, it's supposed to go up in a bullish manner, but now you can see there was no, it didn't break up, rather it went where it broke 786 below. That means our Gartley pattern was invalid there. It's not a Gartley pattern. Once your Gartley pattern is invalid, then you look for a crab pattern, because there's two patterns that comes from 618. So now we look for what? For a crab pattern. But now when I took this point, this X, I changed it. I'm making a good example of, you can use whichever impulse leg that you can get on these retracements. So now guys, you can use this one. This is not invalid. Only our Gartley pattern was invalid here when it broke this 786, which means our Gartley pattern was invalid. But now we're waiting for what? For a crab pattern. But if you take this point and put it on the above there on that retracement, you can see that it goes up on the on point A and comes back, retrace on where? On 786, which means 786 is called a butterfly pattern. Butterfly pattern. That's also a pattern that you can cater for on this move right here. I'm gonna show you a butterfly pattern, rather. That's what I see is possible for this harmonic pattern. So guys, you can take this one as an impulse leg, starting from that point to point A there on top, going back, retraced where on 786, went up, never broke the high, but came back as a double top. Once you see a double top or a M type forming there, that's where you see that it's a harmonic pattern that's forming there. So it went up, never broke the high, came back, broke the low, but retraced where? On 127. That is a valid butterfly pattern. Once you see that it's validated, that's where you start to draw your what? Your harmonic pattern. From where? From point X. Okay. Sorry. I put it on the wrong point. We start from where? From point X right there. Take it to point A, point B, which is your what? Your 786. 786. Take another triangle. Started from point B to point C. Never broke the high, but formed what? Formed an M type there, or what we call a double bottom. And you can see the second leg of that double bottom is below the first leg, which is it's a valid double top type or a valid M type. I'm going to explain further on that on the group, guys. So once you get your C, we're going to where? To your D point, which is your valid pattern is valid there. We get what we call a butterfly pattern. butterfly pattern. Once you get your butterfly, that's where you check for your entries, guys. But you don't, once it gets on your D point, you don't just enter there. You don't just enter on that D point. What you look for is entries now. What you can get on these D points, guys, you can expect rather a double bottom or inverted head and shoulders, because this one we call a bullish type. Is a bullish harmonic pattern. Once a D point is at the bottom, that's a bullish harmonic. Once a D point is above, then that's a bearish harmonic. But this one, it's a bullish harmonic. That's why you can expect a double bottom like this. Okay, sorry. You can expect a double bottom that's going like this. Or you can expect what we call a inverted head and shoulders. It can go something like this. It can go something like, let's take this trend line, something like this. I'm gonna get your left hand shoulder, you get your head, comes back, retrace on that zone, then you shoot up. That's where you can get your entries, buy entries. But now you don't just enter also there. You can use whatever price action you've been using before if you are an experienced Forex trader. But if you're inexperienced, we're gonna take you through, guys, at the group of how to get these entries. You use whatever tool that you know about. Price action is very important when you use these types. Okay, most of the time when it comes from point C to point D, you're gonna see it coming down as a bearish channel. You're gonna see it coming as a bearish channel. Once it comes as a bearish channel at the bottom, that's where you get these patterns. That's where you're gonna get your double bottom or inverted head and shoulders. So what happened there? It gave us a left hand shoulder breakthrough as if it's fooling sellers. Sellers went through there, but we know that it's going up. What confirmed it? It's a bullish harmonic that we saw there as a butterfly. So when it got there, gave us a head, broke through that trend line that we put as a broke through that trend line. Once it broke through, it came back and retested where it's gonna come back and retest on this zone, or come back and retest where on this trend line right here. That's where you can get your bullish. That's where you can get your bullish entry, that right there, guys. But another thing, once you get on those deep points, that's where other harmonic patterns are gonna form. I'm gonna take you through this trade. I'm not just gonna do this video, analyze it, and just give it to you just like that. By next week or in coming 2 weeks, we're gonna do at least 3 or 4 videos explaining only on this harmonic pattern right there. I'm gonna explain on whatever harmonic patterns that we're gonna get in the coming 2 weeks, because we're gonna get at least 4 or 5 patterns on this deep point alone. Remember, guys, we're on the daily time frame now. Once we go to 4 hour or 1 hour time frame, that's when we're gonna check for smaller harmonic patterns on our deep points. But I'm gonna take you through on that later on. Okay, guys, on this harmonic alone, there's a lot of harmonic patterns that happens there, because remember, these patterns form when the market is reversing or when the market is retracing. That's where you get your harmonic patterns. We call this harmonic. We call this okay, I'm gonna show that word also in there. I don't want to show everything, guys, because this video is free, it's uploaded. But once you get to our group, that's where we're gonna show you a lot of things concerning these patterns. Okay, I went to a 4 hour chart now. I want to show you smaller patterns that formed within this bigger pattern on the retracements of this pattern right here. Okay, let's check there. Once you check, you check for your impulse leg. Check for your impulse leg. You can see that there's wicks that formed at the bottom. 1 wick at the bottom there, second one there, third one. All those are your impulse legs. That's when you can get which one will be your best impulse leg on those impulses that you get there. Okay, so we get this one. Let's check for this one. Let's check for this one. Okay, right here. Let me wipe off the bigger pattern. We're gonna come back to it later on. Let me wipe off that bigger pattern because it's gonna confuse you guys. Okay, let's check for impulse. That's our point X right there. Point X right there comes from point S to point where? To point A. From point X to point A. It came from point X, went up to point A, came back and retraced where? On 786 right there. That's our point B. It went up, never broke the low, the high. came back and broke the low and retraced where on 127. That's our butterfly pattern also. Butterfly pattern we saw, if you remember, we saw it on the daily time frame. We saw a bigger butterfly pattern, but now we're seeing what? A smaller butterfly pattern on a 4-hour chart. Let's start to draw it, guys, so that you can see it more clearly. Point X went up to point A, came back and retraced where? 786, right there. We draw another one, another triangle also from point B. It went up to point from point X, sorry, it came from point X, went up to point B, went down to where? To 127. Butterfly pattern valid right there. From point this point, this is our D point, which is your entry level. Now I'm gonna show you. I'm sure you're asking yourself where to take where to take your take profits once you spot your harmonic pattern. Harmonic pattern spotted right there. That's our butterfly pattern. So now you take it all the way from up there, take your fibs all the way down to D point, all the way down to D point. That's where you get your, now we want to spot our take profits. Now there's 2 points of take profits, guys. And remember, we're not making this up. These are the rules of harmonic patterns. These are harmonic patterns rules that I'm telling you right now. So we spotted our butterfly. Now we want to spot our take profits. So there's 2 take profits that you get on harmonic patterns. Is 32.2, is 38.2, sorry. That's our first target. And second target is 618. You can see if we take our fibs from right on top to the bottom on our D point, you can see it went up to where? To 38.2, which is our first target was hit right there. First target was hit right there. And it doesn't always hit our second target, guys. Doesn't always hit our second target. As soon as your first target gets hit, then second target is not guaranteed. Second target is not guaranteed. But if you can look closer there, it went up, hit the first target, came back and retraced, went to where? On second target. So if you went out on the 38.2, it's fine, you made profit. But if you held also, you didn't lose, because it went up again to what? To our 618. So 38.2 was our first target. Okay, let me use a shade there. 38.2 was our first target. Got hit. Second target also. Okay, second target also got hit where? On 618. 618 got hit. So this pattern was a valid pattern and it worked. All this pattern works, guys. Trust us. All this pattern works. Harmonic pattern is a powerful tool. We learned this pattern when we started trading in 2016. So we've got a lot of experience in trading these harmonic patterns. So point X, point A came back to point C, to point X, point A, point B, point C, point D. That's your entry level. First target was hit. It retraced, went up, shoot up straight to take profit 2, which is 618. So butterfly pattern was valid. But if you look closer again, let's take off this. Let's take off this take profits. Let's take out this take profits. You're gonna see there on top we got what? M type. At the bottom, what do we get? W type. That's our harmonic pattern also. Let's check. We're gonna see first impulse leg on top. There's a lot of impulse leg that we're gonna check which pattern is this. Let's check. Let's get right to it. Let's start with this one. What do you get there? 50%. What do you get? 50%. I don't think it's that one also. Let's start on top rather. Let's start on top. You get a 38.2. You get a 38.2 at the bottom. 50%. 618. 618. This was a pattern that formed there. I'm going to explain further why do I say this was a pattern. We call this one a crab pattern. I'm going to explain why. We call it the okay, it came from point X to point A, went up as a W type. Point B never broke below, went up and shoot up to 1.618. We call this a crab pattern. What did it give you on top? It gave you a double bottom. That's what I said, guys. That's what I said. When it gets on deep points, that's where it gives you patterns. It's either you're gonna get a head and shoulders, inverted head and shoulders, or double top, or double bottom. That's where you're gonna get as Confluence. You're gonna see there on this deep point, it went up, gave you a first leg, came up, went back again and retraced, gave you what? A double bottom type. That was your entry right there. Right there was your entry. You can put a trend line also as your Confluence. Let me lock this one. You can put your trend line as Confluence. Once you put your trend line like this, once it breaks that trend line, that's where you're gonna enter. Retested also there and shot up. And shot up. Once it when it was giving you targets on this harmonic pattern, it's also forming another pattern also that we call the crab. So let's take it from point X down to point A and point B, which is our 618. Let me rather change the color there. Let me change the color so you can see clearly. So now we're forming what? A crab pattern. This is another pattern. We already took our profit there. We took it on 38.2. We also took it on where? On 618. Now we're looking for other entries now. We're on a second pattern now. From point B to point C. All the way to where? To 1.618, which is our point D. Then what do we take? We take our trend line. Draw our trend line all the way to the top. All the way to the top. All the way to the top there. As soon as it gives you a double bottom, breaks our trend line, that's your entry right there. Now we're gonna check what? We're gonna check our take profits. Remember guys, I said first take profit is where? 38.2 and the second profit is 618. I said when it's a bullish pattern, you start to check your take profit from the top. But now since it's a bearish harmonic pattern, we're gonna check from the bottom. Take your fibs there from the bottom all the way to the top of our pattern. We said that first target is where? 38.2. You can see that area is also sensitive. There's a lot happening on that area also. It gave us on, it took our first target right there. 38.2, you could have got your profit right there on 38.2. Retraced a bit, went down again to where? Shot to 618 right there. 618 was our second profit. Two harmonic patterns formed in one place. Two, we could have got 4 profits right there. On our butterfly gave us on 38.2, shot up 618 on our second target. While it's giving us our profit right there, it's forming another crab pattern. Went up all the way to 1.618, gave us a deep point, shot and gave in there, double top to give us our entry. We took it all the way to 38.2, broke through again, took it all the way to 618. Two patterns. I'm just explaining smaller patterns that form on our daily target harmonic pattern. A lot of patterns form on each other, guys. A lot of patterns that forms on each other. Okay, let's check. I already explained on this one, which is, I said it's our butterfly pattern. That's taking you to 786 as our retracement. Let me draw it again so that you can remember what we're talking about here. Came back to where? To 78.6. Draw another triangle. Draw another triangle, which take us to at the bottom there, 127. There you go. Which is our bigger pattern right there. Our bigger pattern right there. Our bigger pattern right there. So if I remember well, there was a zone also that we formed on this point. There was a zone that was there. There was a zone right there. There was a zone right there. There you go. So it went up. If you remember, I said it was coming as a bullish channel, broke through, came back and retested on that correction, went up as an impulse, came back as a correction, shot up, gave us our impulse leg, gave us a butterfly, gave us two patterns first, and gave us our bigger pattern, which is our butterfly pattern. On the deep point also, guys, that's where you can get smaller patterns on that deep point. I'm only going to show one. Because of time, I'm only going to show one pattern which formed on the deep point, because these patterns formed everywhere, guys. This pattern, so you can see There's a lot of impulse there that we can use. Take from point X to point A. Let me make it bigger. Take from point, there's a lot of impulses that you can use there. A lot of impulses that you can use on these patterns. Okay, let me take rather this one. Let me take this one. This is a good example. First, as soon as we got there on that deep point, as soon as we got there, it threw what? Harmonic pattern. We call this one a deep crab. Came from point X to point A, went back, gave in on 886. 886 is a deep crab. Came back, gave us our point C. Shot up on deep point on 1.618. As I said before, this is our crab. As soon as it got on 1.618, it gave us what we call red roll tracks. You're gonna see there's a bigger bearish engulfing candle there, which gave us our entry. And you take your trend line, put it there as your confluence. As soon as it broke that trend line, that's your entry, guys. Let's draw this fast, quick. I don't have time, guys. Don't have time. Let's draw this one. I'm gonna draw this pattern very quickly. I'm gonna draw this one very quickly from point, where's our point X? Right there, point X to A, went up to 886. Then we take the second triangle from 886, C point, all the way to 1.618. That's our D point, that's our entry right there. Then when you check for take profits, take profit 1, we said it's 38.2. Take profit 2, we said it's 618. 618 is our second target. From the bottom to the top, 38.2 got hit. You can also see it's a sensitive area. Broke through there, went to where? 618. Second target. Both targets were hit. Harmonic pattern. First target, second target got hit. Now we're looking for what? We're looking for a second harmonic pattern. Next week, guys, I'm gonna show you what pattern did form here. What pattern is gonna form here. That's when we're gonna shoot our second video, showing you guys that these harmonic patterns do work. Okay, join our group, guys. Solve Forex. We're gonna explain further on harmonic patterns. There's a lot we're gonna explain. We're gonna teach you guys concerning Forex trading. But right now, I don't have much time, guys. See you next week. I'm out. Cheers.